Hello, ladies and gentlemen. Hello, good afternoon. I would like to welcome you to this Friday afternoon webinar. For those who don't know me yet, my name is Theo, and I'm here to introduce you to Jens. And yeah, I'm sure you're going to have a very, very valuable lesson today. So before we get started, I would like to make sure that you all know about our mobile native application, the Admirals application. Please make sure you download from the App Store, from the Google Play. Also, just very quickly to go through the some social media channels. This is the Instagram page. Please make sure you follow us on the Instagram so you will get notified all the time. We put content about trading related, some stories on a daily basis. We have some interesting TikTok videos here. You can follow us on TikTok, and everything is related to trading. We try to do it in a nice, funny way. So it's not all the time needed to be formal, right? Then we have the Admirals Telegram channel. Here is the link to join. You can now comment on the videos and on the post, and that would be great if you can engage with that. Myself can directly answer to you as well. And the last one, I would like you to make sure that you subscribe and like the videos. It's the YouTube channel, ladies and gentlemen, where we put all the recording webinars done by Jens and the other people. Here at the Trading Spotlight, you can find all Jens' webinar in case you missed it. And if you haven't so noticed, we do live trading webinar Monday to Friday, 7:30 to 8 a.m. GMT time. So please make sure you engage yourself with this. And without keeping more of the time, I would like to introduce you to one and only Mr. Jens. Hello, Jens. How are you today?
Hello, Theo. Thanks for having me.
I hope... honored to have you, Jens.
That's too much. Yeah, I hope that today will provide some nice opportunities. In fact, we will focus on the earnings season, and we are about to enter a slower period, let's say, of the earnings calendar. But still, today, I think I have some hotter stocks, and that could be very, very interesting. In fact,
I'm sure everyone is waiting for that.
Shall I share my screen?
Please, please.
Oh, I'm allowed to do so already.
Oh,
okay, that's great. So let me just type in hello. So this is where you can ask all your questions. In fact, I don't want to waste too much time because we have 3 stocks which are potentially very interesting today. First of all, I want to point out the risks being involved when trading the products we are trading here. So and in fact, this is no demo stuff or something like that. So this will be real trading. So please be aware that everything I present to you here is for educational purposes only. It could be that I formulate a trade hypothesis, a game plan. We will go through this. In fact, that I will make a trade based on this. If you plan to duplicate the trade, so please be aware that you're 100% responsible for all risks involved. You will profit if the trade is a winner 100% from potential gains, but you will also be responsible and have the responsibility for all losses which could certainly occur. So please make sure that you understand all the risks involved, and so that's in fact it on the introduction and the risks being involved. I don't think that I need to introduce Admirals any further after Theo's introduction. So about Admirals and the conditions, in fact, probably something I'd like to note when it comes here to trading with Admirals is that we have 3 trades for free, round turn trades for free, and quotation marks. That means we don't need to pay commission. So from the 4th trade, from the 7th half turn in this case, the 7th execution, we would have to pay, but till then we don't pay commissions. This is something which is very interesting, especially for high frequency traders. Put them high frequency in quotation marks too. Traders who have a higher frequency in their trading, and in our case it's day trading, so that's definitely something worth considering when looking for a broker. All details can be found on the website admiralmarkets.com. And so let me just think about, first of all, let me just guide you here through my screen so that we know what we look at. In fact, we know, very important, it's very clean, let's say. So there's not much stocks I look at. So this is the first thing. So here in the symbols tab, I usually have all symbols I plan to trade or I have on my watch list for the day, and not much more than that. So to have a clear view on the quotes and what's going on in the stock right now. Here is my execution panel, let's say. So that's the trading window, and it's a 5-minute chart. In fact, most of our decisions, respectively, how to decide how the setup will show itself, will be done via something you will see here. So this is my second screen. I will share this in a few seconds. This is from TradingView, and we go with TradingView here because we execute the trades with a contract for difference, so a CFD. But for making a trade decision, I want to look at the real stock, the physical stock, which is traded at the NASDAQ or on the New York Stock Exchange, for example. I want to have the true volume, and I want to have clear, clean levels in case of, for example, the volume weighted average price we work with. So that's why I carefully watch the price action here in this window. But if I make a trade, then I make it here within this panel. So this is the mini terminal. This is, by the way, an add-on you can download for free. It's a Supreme edition or Supreme add-on. You can find it on the website admiralmarkets.com and download it for free. And I highly recommend doing so. By the way, let me just head over here to Admirals, and so there you have the platforms tab, the MetaTrader 5, and there you have the MetaTrader Supreme edition. And there is where you, for example, find the mini terminal. The reason for that is because it's very intuitive, and not just that, but you can easily and quickly enter orders, buy limits below the price, buy stops above the price, and vice versa with sell limits and sell stops. You can also, you will see that if we have a trade, you can also manage the trade quite nicely with another window with the stop appearing, then, for example, trading the stop and so on, take profit and so on and so forth. This is here on the upper right. You have the hourly chart to have an overview on where we trade right now. So you can see, for example, looking here at FL, this is the ticker symbol for Footlooker. We will look at this stock today due to earnings which were released in the pre-market. We'll look at the earnings and why it's a hot stock and why I focus on that in a few seconds. We'll go through a checklist, therefore. So to get an overview on where we trade right now in the current environment, so you can obviously see this is a quite choppy environment. So what we certainly want to see is a break out of this range here, somewhere on the upside, and probably then aiming for 40. And I can already say that in the pre-market here, as you can see, we are obviously trading higher, around 38. So this is, by the way, another reason I want to look here at TradingView, because I have the chance to display the pre-market action, respectively the after hours in this case. So in blue, it's the after hours, and then here in orange, this is the pre-market where we currently see trading, and where I can also see whether the stock is hot or not. And this is also something to focus on. In fact, we don't have this here, as you can see, but as of now, we are trading, we'll open close to somewhere here. So close to this high, and obviously out of this range. So this is a clear bullish breakout, which we can see here, opening with a gap higher. And then we have the daily chart here to get an overview on where we trade in the bigger picture. Now, obviously, we are about to make a higher low here with a breakout, and potentially once we claim or break above 40, that could be then some kind of a turnaround, let's say, for the stock after it came down. Let me just see. Do we have it here? 1 second. I have to bring this down a little. So there you can see that we are in a clear downtrend for around 1.5 years now. So May 2021, we made an all-time high. Is it an all-time high? I'm not really sure. Probably traded higher somewhere in the past, but before that, here we traded somewhere around 66. Then came down quite heavily, nearly halving the price, and now we are about to form a potential bottom here. And the same is also true for Macy's. Interesting thing is Macy's had earnings yesterday, so we will find here Foot Locker first, and I've also prepared something on JD. The reason why I don't want to focus on JD that much, at least not now, depends a little on how we come into the market, is because I formulated, and there we come to my game plan sheet. The reason is, you can see that here I highlighted the ticker symbols on the left. So this is an Excel sheet I prepared for myself, and I go through every day, so to be well prepared for the day and know which stocks to look at. This is a ticker column here in this case, and you can see I have this in red. It's not in green as in FL or in M, and the reason for that is because I favor the short side. The problem is that earnings were quite good, in fact, in JD. And I have some problems, or problem is the wrong word, probably I don't really like to short a stock which had good, strong earnings, in fact, so earnings were quite solid. Then short into this pop higher, even though we look quite extended on the upside. But right here, we want to focus mainly on FL and M because this is, let's say, straightforward. We have strong earnings. We have a clear, clean breakout of a clear, clean level, technical wise. And then we have also elevated RVO, we call this. So in the pre-market, we see some elevated action already. And that's why I want to focus on these two and keep JD aside a little. So if we don't get action or a very choppy market opening, then we will certainly switch from M, respectively FL, over to JD and go through this. But first of all, I want to focus on these two here, on these two green columns. And so what you can certainly see here is first of all, I have support and resistance, and I want to know where market will potentially find support, respectively against which levels. I'd like to see buyers stepping in case of a long engagement, respectively, which levels I could imagine to show some heavier resistance on the upside. And so now the question you might ask is, where do I get these levels from? And then I head over here. We can certainly do this within the MetaTrader, but I have not included any lines here, but this is just to get a rough overview in this overall picture. But I usually do this here within the trading view environment. And first of all, let's have a look here at a 30-minute chart. You can see here something we've also seen in the chart on the hourly. In this case, no, it's a 30-minute, doesn't really matter. So you can see here, this is a strong resistance zone, which we found. In fact, already here in August, that was the last time we saw quite solid earnings. That's why, by the way, something probably keep an eye on, because back then we had solid earnings. I don't really recall how strong they were, but we then rolled over for the day. So it's like you saw the pop higher, and then there was no real follow through on the upside, and we drifted, we consolidated, but it wasn't really that strong. And then with the overall market coming under pressure after failing again here to take out these earnings highs around 40, we then saw a sharper rollover and push back to $30 around. So now we see a next attempt, and you can see that we're again within this range. So it's a very strong resistance area. I want to be honest, I'd really like, or it would have been better or nicer, let's say, if we opened above here, this resistance level around 40 USD, because this would make a clearer picture showing, okay, we cleared this resistance, and if we can now hold it, then potentially buyers will step in and push the stock higher. So it's not that perfect, let's say, the setup we find here, but we have a clear level to see how the stock behaves, and then we will let pass some minutes, let's say. We've found now support here in the pre-market. So you can see, that's by the way, coming back here to the preparation sheet, where 37, respectively 37.50 come from. This is where the pre-market found support. And then on the upside, it's obviously 39, respectively 40, and above that 41 as a next potential target. And the reason why I point these levels out here is because you can clearly see them. So this is the, let's call it earnings candle. The high is 41, obviously. So this is a strong resistance on the upside. Then we came in, we saw or found support here around 37.50 on the downside, 37 probably, a little lower than that. Then you have here 40. We know that because we looked at the bigger time frame and we saw that this was a strong resistance. So 41, 40. And then you have also here in the pre-market, even though that's a little difficult candle, but I like to work with whole numbers. And if I'm then looking here at in this case the stock, I could imagine, let's say, that we have 39 as a potential resistance on the upside. And this is how I come to the levels. Still, you probably wonder, okay, that's quite straightforward, let's say. Okay, I know now where these levels come from. Okay, and we do the same in Macy's, for example. Let's work our way through FL first, and then go over to Macy's. It's another strategy. So in fact, here you have in the upper part of this file, you have the let's say hot news or hot stocks for the day. In case of Macy, we had a stock which was very hot yesterday, but today we focus on the stock after we've followed the price action and what we've seen yesterday. So it's another setup we're looking at here. But now what I have here is the news. So I focus, or I want to know why the stock is hot. So it doesn't really need to be an earnings catalyst. So for example, I think two weeks ago, something like that, potentially, we've seen Facebook, or respectively Meta, being hot due to a layoff, which went over the ticker, and they were laying off over 10,000 employees. And this is usually something, at least initially, which is bullish for a stock. And based on that, I had a long play then. And it was also a hot stock, but it wasn't due to earnings. And then after earnings, it was clear that they are laying off more people, which then resulted in the pushback above 100 USD. So in the news column here, I make sure that I know why the stock is hot. So this looks, I mean, I know what's written in there because I wrote it in, but you probably will have difficulties reading that. I highly recommend finding out about news on Twitter. So there's a great follow, which is, this is by the way JD, so this is FL. It's the Consensus Gurus, which are powered by Quarter. It's a great app, by the way. You can also download it. It's for free. And there you get a quick overview on what came out in terms of the earnings, what was the consensus, so what did Wall Street expect, and in fact, without having to over read it and interpret it yourself, you have also an interpretation, respectively, at least a clear, like, was it above or below expectations? And you can see this is FL, so Foot Locker. By the way, I just hope that everyone knows who's Foot Locker. By the way, let me just type it in here. So Foot Locker, where we have it. Just see, the problem is that this is in German. So here, so everyone knows about Foot Locker. Foot Locker is some American sportswear and footwear retailer. Okay, so potential candidate, or not really sure if it's a competitor, but from Nike, Adidas, and so on and so forth. So this is the business there, obviously, and so you see beat. Wherever you look, you have a beat, and it's not just that they beat, but it's what's also important is not what we've seen in the last quarter, but also how they guide for the upcoming quarter. So this is what you see here, fourth quarter. Then, so they expect a consensus here in this case, which is better. So in what do you call this? Not sure. In German, it's Klammer. It's like, this is showing it's a minus, in fact. So sales, they expected to come coming lower on a year-on-year basis, but they come in lower but above what Wall Street has expected. So Wall Street expected the numbers for sales year on year coming in at minus 15.4%, and they say minus 9%. They see a higher than expected gross margin, and they have a higher than expected adjusted EPS, so earnings per share. So this is also strong guidance in this context. So long thing short, it's a strong beat. It's really strong, and the stock reacts as it should react, as you can see here, or as what you would expect out of such a strong beat here. You see that the market is gapping higher on this news. Obviously, we're trading around 38, and we have solid potential to potentially also break here above this strong resistance area around 40. Still, this is not enough, for me at least, to say, okay, the stock is hot for the day. So you see here, okay, we have a gap. We're gapping higher. Where do I get this from? Therefore, I highly recommend going to pre-market screener from MarketWatch. I will share this link here in the chat box. Let's call this PMKT. And there you can see that FL is on top of every other with the most traded stocks. So there's other stocks, but obviously FL is the highest. It's 16.61. By the way, this is something we have to update now. So 16.61. And then what I also want to know is the volume which was traded in the pre-market. So in the pre-market, we have already seen that nearly 760,000 shares were traded. And why is this noteworthy? Well, because on average, you see an ADTV. This is the average daily trading volume. I want to see 1 million shares be traded, so I'm not really a low float stock trader. I'm not really willing to take the risks here, or at least I'm not willing to take the risks involved in trading low float stocks as long as the stock is not super hot and there's lots of liquidity being provided, which leaves me get in and get out at clear levels, identifiable levels, to a good price without much slippage. That's why you see 1 million here. So if you see on average 2.9 million shares being traded per day, and then we have now before the market opens, so this is pre-market, so that means in 10 minutes from now, Wall Street opens, we have already seen a volume of more than 700,000 shares. So that means the stock is really super hot. It's 30% of the average daily trading volume being traded already in the pre-market. So there's lots of liquidity already provided, which is also pointing out why these levels make sense to look at, especially on the downside. I think 37.50. Some might say, well, is it really significant? I mean, a level gets significant once there's volume being traded at this level, and market participants are showing, especially big institutional guys, are showing, okay, yeah, we expect this, or we respect this level. So that being said, well, it's underlined by the fact that we already seen over 700,000 shares being traded, and then in the next slide, you can see here, I also have a look at the ATR. So how much of a move can I expect on an intraday basis to happen? Usually after such an earnings beat, or respectively earnings release especially, you usually expect more volatility and bigger moves to happen. And then I have also some notes here on, first of all, it's this short percentage and the so-called short float. So how many of the outstanding shares are shorted from market participants like hedge funds and so on and so forth. And you can also see here INST, it's short for institutional. I want to know the institutional ownership. In case of Footlocker, it's nearly 100%. So it's nearly 100% institutionals right now here owning the stock, which is very interesting because, well, it would be even more interesting if we have kind of a growth stock, let's say, and they disappoint in growth, because then you see institutionals dumping. And if institutionals start to dump, you can expect the market to really move strong on the downside. In this case, it's interesting because it's likely that market participants will hold their shares. So there's no real reason to believe that institutionals will dump their shares now, but in fact, they will hold it. And there's not much supply potentially around a stronger demand, which certainly would result in the stock to rise. At least this is our expectation. So this is something also noteworthy. You might probably wonder, where do I get this information from? Because this is like this is some forward information, let's say, where it's something like Supreme. It's in fact also available for free on a website. It's called finwiz.com, and then you can type in here the ticker symbol. It's FL. called FinWiz. So, and there you have plenty of information around the stock. So it's not just the market cap, which, by the way, 2.99 billion. It's not such a big market cap, let's say. And there you have, for example, here, the average trading volume. So you have an information on that. You can also find this here by the pre-market screener if you click on FL in this case. But also you have here, for example, information on, in this case, the short float. Shares float, first of all. So it's 91.66 million. By the way, low float stocks, I mentioned them earlier. I usually mean stocks which have a float below 10 million shares. And then you have the short float here, so nearly 10%, 9.67. You have the institutional ownership here, for example, and so on and so forth. But these are the two most important numbers for me. And then I formulate a game plan. So I know the stock is hot. I know the technical levels to look at. And now my plan is to say, okay, they beat on earnings. It's a potential earnings play. So this is the setup. The stock is hot because you can already see it here, nearly 1 million shares on a pre-market being traded with an average daily trading volume of 3 million. Well, obviously, this is a stock of interest. We have a strong resistance zone on the upside. Not perfect, because usually you want to see the stock gapping above that and already having cleared the strong resistance. But then you have a potential play, let's call it, given this resistance zone here above 40 for a potential momentum move. So but just imagine there's now market participants. Again, you have market participants who are short. And this is now 10% of the floats of the float. So 10 million shares are shorted, let's say, from market participants. Again, this is a information you get here. Okay, so if you have 100 million or 94 million shares being outstanding and 9.6 is shorted, well, then it's nearly 10 million shares which are short. So what does that mean? Well, that means that once we break above that level and there is no real strong supply being offered because the stock is in institutional hands, let's say, well, this is a potential strong breakout region. So if we break above that level, well, you expect the stock to gain momentum. So this is certainly a level to watch then. And if you put this together, then I come to the idea to say, well, okay, what do you want to see? What are my scenarios? So I usually game plan it for two scenarios. So first one is if it holds a certain level in the pre-market especially, and sees potentially some buyers coming in already and pushing the price higher, then I usually expect the stock to continue to push higher. If we drive already from the open because there's buying coming in and we drive higher, well, then I certainly want to see the market holding a certain area, let's say. And how do I spot this area? I spot this area by saying, well, the volume weighted average price, so the price which was paid from market participants in the pre-market, is at exactly what I'm looking at here. So let's say we now see an opening drive above 39, which I spotted here, probably towards 40, let's say, and what we first find some kind of resistance, and then the market pulls in. So I have some minutes to wait for. By the way, we have to wait because we have 5 minutes until liquidity providers provide liquidity and we see quotes coming in. So we already see the first 5 minutes of trading. By the way, we now go down on the 1 minute chart here in this case. So you see now the opening drive on the upside. So this is something I visualize. And then I see that the market is finding resistance against 40 and then coming in, but holding, let's say 39, holding the opening price, let's see, holding the volume weighted average price. So the price, which is averagely paid from market participants. And then I see the market seeing some slope up again, going for a break higher. I then say, well, I'm buying here already, potentially adding with the break higher and having a stop placed on the so-called intraday lows in this environment. So this is in fact what I'm waiting for. By the way, I now have to update my sheet once again. So I have it also here. I leave the chart open. So let me just update here the sheet. So it's 932K. It's a gap of, what do we have? 13 to 70%. I have JD. It's also something, again, we will focus on JD in a few seconds, and also on Macy's for a second day play. I'll tell you what I want to see. But I could imagine that the most interesting stock right now is in fact Foot Locker based on what we've seen so far. Let's probably jump first. Let's have a look here. So Macy's is not that interesting, but was very hot yesterday. So yesterday we also saw some strong numbers from Macy's, and Macy's was interesting. Macy's, probably some of you know that it's a retailer in the US. This is this big building where you can buy everything, and it's a I'm not really sure if we can call it a competitor of Walmart or respectively Target, but they are playing in the same environment, let's say, consumer staples, consumer discretionary. Let's come here to the earnings from Macy's here. So they were also very strong. And what's certainly interesting was, in case of the inventory, they came out with some solid numbers, not as Walmart, respectively Target. Walmart was even better than Target, I think. But they also kept their guidance for the fourth quarter, which is now the Christmas season. And that was something which resulted in strong buying in the stock yesterday. So Macy's is not such a volatile stock, let's say, but the overall performance here yesterday with plus 15%, that was really, really strong. We closed near the high of the days, and we are currently opening around this price again. And this is usually then something which I like to look for buyers now stepping in. Big portfolio managers, for example, they probably get aware now in the morning meeting with their analysts or something, and they say, well, they guided quite strongly for the fourth quarter compared to Target, for example, who was sold off the day before. So probably this is worth watching here what we get in the consumers area. Macy's is potential outperformer, and that's why the stock is probably performing on the upside today again. But we first of all want to focus now on Foot Locker here. So we want to look, and by the way, something very interesting. You can see the stock is traded at the NYSE, and there's nothing happening right now. So there's no volume spike coming in or so. The reason for that is because the specialists, the market makers who are quoting the stock now, right now, they are not quoting the stock. So they wait. It's potential a sign that there's a strong imbalance between supply and demand. And they have to make sure that this, let's say, gap fills up, let's say. So not the gap here in chart terms, but the gap in terms of supply and demand, and that they can offer good quotes here. So that could take some time now. This is, by the way, one of the reasons why, for example, liquidity providers are not offering liquidity right now. So you can see that here in FL. So nothing changes. And to be prepared for that, they say, well, we wait 5 minutes until we get now it's the opening price. So we can see it here. And so now let's see what happens. So we have time. It's not that we just jump in. We know what we want to see. We know why we want to see it. And now it's starting. It's a game of patience, let's say. Do we get to see what we want to see, and then take it from there? So right now, for example, there's no strong opening drive. That's the first sign we get here. So that being said, it means that probably we are not clearing 39 right from the start. Probably we will see a flush on the downside first, and then see whether 37 holds. It could be that we're formulating a bullish thesis here, but we're not getting filled on the long side. That's, by the way, also something to keep in mind. But we know what we want to see to be long if we get long. And so this is exactly what we wait for now. So Macy's is fighting with 23. You can see it here. So there's the drive higher. It's also something I already game planned. I prefer, in fact, to see a flush on the downside here to the highs from yesterday, or close to the closing price. So that was around 22.70. See a flush, probably slightly below that 22.50. Holding that level and then turning up again and probably pushing above the volume weighted average price in case. So this is right now at around 20. Yeah, we are trading around that level. That was also a pattern yesterday, which is, by the way, one of the reasons why it's very interesting to look for such a stock then in this case, for a second day play, let's call it. You can see a pattern yesterday around the opening. So they had also strong numbers. We've seen that, and there was no big volatility. And then we saw after here, this trading around 40 cents something, we then saw the market holding above, in this case, yesterday was 21, and then breaking to new intraday highs. That could be something. And by the way, the break happened around 10 minutes in the trading day. That's something which we keep an eye on, respectively, which we saw yesterday, and something worth noting also from yesterday. Yesterday, in fact, the first flush was also down. I also keep an eye here on Foot Locker. there's something, not that much volatility right now, but interesting enough, we are at least clearly holding above 37. But coming back here to Macy's, so we've also seen a flush lower than, but we were strongly bought back. You can see that here. That was the candle yesterday. In fact, you have to zoom in very, very here. So that was the candle, flush lower, and then we were bought aggressively back above, in this case, 21. Let's see if this happens today too. Yesterday was within one candle. If we are failing to break higher, in fact, if we are failing to go back above the volume weighted average price, I'm not really interested in being long the stock here for a momentum play on the upside. So right now, in fact, to be interested in the stock, let's say, I really want to see the opening print being broken on the upside. So what's the opening print? Well, the opening print is around here, 2280, falling really nicely together with volume weighted average price. So could imagine here that along against that level, or breaking back above that level is of interest. Then I'm risking against the intraday highs. What's about Footlocker? No, well, we're coming in. So this is interesting now. So you can see now we are going to 37. That was the level I was pointing out in my game plan. Okay, so here again, if holds 37. So we are now, I'm seeing a test of this level. I'm not buying aggressively here, but if we hold that level, then things start to get really interesting. So now let's have a look at where we have the VWAP. VWAP is around 3807. So that's around here. If we now make it back above 3807, well, certainly we held 37 then. So we are risking against that level. Let's have a look here at Macy's. This is also very interesting, 2280. So let's see. So this is what do we risk here in this case? So this is a risk of 130 around, 130. So enter a small position. So first of all, I'm buying around that level. And I'm not buying that much, but it's just a small position. So 38. There we go. Placing a stop below the intraday lows, which can be found at 3880, as we've seen. Oh, I'm sorry, 3880. So this is the level we're risking. I'm sorry. So now the great thing about this is you can see that I can easily move it up to here, intraday lows. And then let's head over to Macy's. So this is interesting. So once again, see here where we stand. So 29.90, risking 40 cents. So I think we are fine with 29.90, buying the break above 29.90 here. Sorry, that was bad. So I'm buying here, risking against 2250. So, and then if we're getting filled now, we're in now in Macy's for our play based on the flush on the downside. And now what we want to see is a follow through on the upside. So let's go back here to Macy's. So what you want to clearly see now, so we are breaking back above the volume weighted average price. Not really sure if this is such a nice in fact, we want to quickly move through the highs now. So I really want to see buyers now stepping in and pushing us to like above volume weighted average price and two new intraday highs, which can be found at 33.06 here. So if we don't get this to see, I'm not really sure if I want to hold the position. Let me just trail this over here, and let's focus here on the price action. And I will watch what we get to see here. You can already say again, I want to see new intraday highs, quickly moving through that. If we don't get to see that, I could really imagine to be out. And by the way, we also got filled on Footlooker. So here you can see that there's also the break higher. Let's now see if we push above 23. If we fail to gain momentum now, what we want to see, here is a clear move higher, break higher. Now buyers stepping, really buyers stepping in. If we don't get to see that, the thesis is not valid anymore. So let's have a look here at Footlooker. Footlooker is nice. Footlooker is gaining some momentum. You can see it here. So Footlooker is gaining some momentum. By the way, I now have to make sure that we also make sure that we understand how to manage the trade, certainly. So you can see that here in both cases, I'm trading the momentum. So I want to see a clear push higher now. By the way, let me just type it back in here. So which means I'm now managing the trades if it gains momentum on the upside. I manage the trade with the so-called EMA 9 on M1. So it's a real clear, clean momentum trade in this case. So in case of Footlooker, Macy's in this case is not behaving nicely. So this is definitely something to keep an eye on. Probably I'm calling it. I'm taking out some of the position, not some of the position, but probably taking out. I'm taking it out. The reason why I do that is because the momentum is not there. So there's no, look at what Footlooker is doing. So this is what you want to see, right? So you want to see the break and get the feedback straight away. If you don't get the feedback, as we've seen here with Macy's, well, this is just not what we want to see. Again, probably it makes sense to say, okay, let's review the action and see what we want to see now. Well, I want to be honest, I'm not done with the trade yet. I enter another order here for 29.90 and say, okay, if we now make it new high and get the break higher, well, this is then probably the next attempt, which will be more favorable. I'm cutting losses short here because that is a quick trade. So it's like you in and then you want to see the momentum. If the momentum doesn't show itself, like it did, for example, yesterday, look here, right? So you got buyers coming in and then was a straight push higher from 21 away and from, in this case, the volume weighted average price. You don't get to see now. So this is like there's no momentum showing, and this is something. Well, I keep the order in here. If we make a higher low now, if we make a lower low, I'm out for the order. I'm taking the order out. Let's have a look now. Let's focus here on Footlooker. We're failing to make it higher. Again, this is also something which I keep an eye on here, because the feedback is I want to see now a clear, clean run above 39 and push up to 40, where I then decide whether to take off some of the position. But this is definitely also something to keep an eye on, because we're failing now to push above. This is a trade we're having here to push above a key level I identified already beforehand. So what you definitely don't want to see is now, coming back here to this chart, you don't want to see now us dropping back below 38 again. So this is definitely something you don't want to see. This is where we entered the trade. So this is now where I trail the stop now and saying, well, I'm not seeing, or I don't want to see market pushing below 38 again, my key level. And that's, oh, I'm sorry, didn't work. Let me just see. So it's, is it now 39? Okay, probably a little higher than that. So there we go. So we don't want to see the drop back below 38, which, by the way, corresponds. The reason you might probably ask why. The reason is because this means after failing to make new intraday highs, we are dropping back below the volume weighted average price. It's kind of my trigger line, which is most of the time working out quite nicely, and you can see that here. So this is not the price action you want to see. You want to see a clear, clean move higher in this case, and this is something you just don't get to see here. So that's the reason why I'm out quickly then in this case. So this is just exactly what we are looking for, respectively, what we want to do in case of trading very short term and actively trading in this case around the market opening. So very active phase. This is also quite spready, right? So it's 15 cents. And what you want to see is also seeing buyers stepping up. So it's like the bid stepping up and saying, hey, yeah, we're willing to buy. We see the break higher after this earnings release. So this is not happening here, right? So this is like, this is not strongly bullish, let's say. Let's have a look here again at Macy's. Well, at least we are holding. So now we are out, a Foot Locker. So this is not what we want to see. So quick in and out, and then I take the loss. Let's have a look here at Macy's again. New intraday lows. So this is the order. I'll take that to the order. I reevaluate. Probably I'm not yet done for the day, but I'm definitely not wasting my time now on this anymore, at least not for now. So probably we will get another chance here if we are holding now 22.50 again. All in all, it's given the game plan I formulated earlier, we are still capable of breaking above 23 and letting this hypothesis playing out, but in this case, right now, at least, the price action is not what we got to see. By the way, you can also see here, I was long with the break above 22.90, risking against the lows of the day, so 40 cents. And I took out the trade with a small loss of something like 15 cents or so. And now we would have get stopped out, which means I took half of the loss I was initially planning to take on the trade, which is already a success in case of my trading. And I still have plenty of room for the day to manage my risk, because I say, well, I have a daily stop level. And as long as I'm not seeing a loss in terms of realized losses greater than what I'm willing to accept for the whole day, well, I'm still capable of moving and see how things play out. And as you can see here, in this case, yeah, well, probably we are now nearing the end of the webinar. But let's keep an eye on here at 38.80 probably. So that's a new intraday high in this case. So we're clearing 39, and again 40 on the upside is a crucial level. We have a clear level of what we want to see. So if we attack that level, we don't take it out, the market bounces slightly and then consolidates and gets tight below 40. This could be very interesting for a long play. If it doesn't play out well, then I take out the trade with a potentially small gain, because I'm buying here break above 38.80, 39 around. But this is something which has to show itself right now. So I have a clear bullish thesis. I have reasons to be bullish on the stocks. The earnings were quite good, quite strong. The same is true for the second day play here in case of Macy's. So we have reasons to be long after yesterday's performance. We are currently not seeing a follow through on the upside. Well, then our thesis, we gave it a try, small try. We cut our losses short once we saw there's no follow through happening. And in fact, that's it. So that's all we can do here right now. JD, that's yeah. Let's have a look here. So was there a chance? Not really. Let's see if we get to see a bounce, but fail here around 58. So JD, again, also very strong earnings. Let's have a look here at the chart, just to get an idea why I formulated a short thesis. So we are very strong we had a strong run, in fact, for the last week. So from the 24th of October, we saw a strong run, nearly 100% on the upside. And then yesterday, earnings beat, upside, downside guidance, everything was better than expected. Also, they had a better gross margin. So this is something you can see here. So beat on revenue, operating income, EBITDA, EPS, better than expected. Gapping not higher, right? So we saw a push higher. Let's come back here to, what do we have it? So we saw a quick push towards around 60, 61, and then we failed. in the pre-market and not seeing really strong demand coming in now from the opening price, which means probably we are done on the upside. And now we are more kind of seeing of a reversal, let's say, or mean reversion trade, probably that's the way we could call this, and down to this trend line, which we can find coming in around, let's say, 454 probably. But again, this is making it my third choice for the day is we have strong earnings. I don't like to short into strong earnings. In fact, I mean, from a technical side that makes sense, but it's not an A+ setup, let's say. It's in case of M and FL, we have at least B setups, let's say B+ setups probably. I rank them that way also to make sure that I understand how much risk I'm willing to take on these positions. But in this case, I mean, I have strong earnings FL, I have strong earnings in M. I have strong earnings in JD. I have bullish theses for M and FL, but not for JD. It's a short thesis. So that's one of the reasons why I'm more careful here. Let's see how we behave. If we get to see a bounce now up to 58, you can see that was a pre-market low here, that were the highs from yesterday. If we fail to capture that region, and if we here stall around the volume weighted average price, that could be potential reason to be short this stock. But first of all, I want to see clear signs for stall out against that level. So that's it. I hope you enjoyed this this event. I hope you learned something, how I go through the stocks, how I spot hot stocks. I mean, it's nice to have something on fundamentals and see, okay, this is the earnings per share, this is the revenue, but at the end of the day, especially when trading stocks, but this is also true for FX pairs. What we certainly want to do is trade based on this news, and I just hope I get you some idea on why certain news events are hotter or make a stock hotter than others. It's not the news itself, but it's the behavior in the pre-market, and where you can already see the pre-market volume. Yeah, showing some how can I say, showing some greater signs of life, let's say, with institutionals pouring into the stock then and trading based on the new gained information. So that's it. Yes, it will be available on YouTube, sure. I hope you enjoyed the event. Again, let's just come in back here to this slides. So if you're interested in more details on stock trading, then check out the website for fractional shares trading at Admirals, and also here are the contact details. If you have any questions, if you have any news you want to get, have questions, again, then check out the website, reach out by mail, also by phone, and that's it from mine. So have a nice weekend. Happy trading. Watch your stops. Enjoy yourself. Talk to you again next week. I really look forward to it. All the best. See you. Bye-bye.